The biggest reason for Latin America is actually the partnership with Venezuela. Venezuela has some of the largest oil reserves in all of in basically the Americas region, and it is an OPEC member. As the production in the U.S. has grown over the last couple of years, especially with the Bakken shale, but also the Canadian oil sands, Venezuela has been kind of, I wouldn't say squeezed out, but they've had to find other locations to send their crude oil. And so with the Hugo Chavez presidency, they've decided they wanted to embrace the Chinese oil companies. And so they've been shipping for the last, say, 7 or 8 years, they've been shipping a regular diet of their crude oil over to China. And the Chinese companies have been, in return, have been investing in Venezuela.
What about the rest of Latin America? Are there other areas that perhaps are lesser known to the general public that might be of interest to Chinese in terms of protecting their energy assets overseas?
Well, yes, there's one that they seem to be really high on right now, and that is a new 300,000 barrel a day refinery that's being considered for construction in Ecuador. Now, Ecuador is already exporting some of its crude oil production to China. Ecuador is also an OPEC member. And this refinery that for a long time Petroleos de Venezuela had been expected partner in, but now it looks like CNPC is taking an active interest in possibly becoming a partner in it, to the point where they're getting one of the Chinese banks potentially involved in financing their participation in the refinery.
By the year 2017, the refining capacity for China was expected to reach 13.5 billion. And to put that into contrast, the American refining capacity is just around 19 million or so. So getting much closer to at least what the U.S. is producing in terms of refined oil. And these projects, a lot of them involve a lot of capital expenditures. Some of it involves acquisitions. With what you're saying, are you saying that most likely over the next 5 to 10 years we will see more acquisitions from Chinese countries, especially in the areas of refining and also downstream, not just in Latin America, but I guess around the world?
Very possibly, because the Pacific Rim seems to be where the investment's going to take place. That seems to be where everyone wants to have their assets in place. The Russians are selling more oil in that regard. The Canadians look to be pushing more of their Canadian oil sands into the Pacific Rim. That seems to be the location where you're going to see probably the greatest amount of growth.
Let me name some parts around the world and get your response as to what the relationship with China would be in terms of M&A activity and the oil activity and energy activity for 2013, and we can include 2014 as well. Let's start with Canada and North America. What do you see happening in that space next year?
Well, the big one is, of course, right now in Canada, the Nexen acquisition that CNOOC is working on. They have conditional approval now from the Canadian authorities, and sounds like the British are going ahead and saying for their part of it, and we have to have the U.S. sign off on it as well. But this is a potentially major step because of CNOOC already owns Opti, which is a partner with Nexen on a major oil sands production facility and oil sands fields. So this is technology transfer on the one side, but it's also a major producing asset.